Okay, what's up everyone? Swinging Bull here with PB Alerts, and welcome to my earnings stream. And today we have two companies reporting earnings. AEHR Test Systems, that is ticker symbol AEHR, and I've actually run the wheel strategy on this stock before and made some profit on it. So interested to seeing how they react to earnings. Maybe they'll get a pullback, and maybe I'll wheel it again. We'll see. The other company reporting earnings is Saratoga Investment Corp. That's ticker symbol SAR. So just real quick, this is actually a put credit spread trade I opened this afternoon. I'll go over that at the end of the stream. Always like to go over some trades during these streams. So AEHR, they're supposed to report at 4:05 p.m. Eastern. And their forecast EPS is 0.01. Forecast revenue 15 million. They're trading quite above their anchored VWAP. Anchored VWAP's around probably like $11.50 a share. So AEHR closed the regular session at $15.17 a share. So they were up a little over 2%. They got going into the earnings, positive PE of 21, EPS 0.77, just a $27 million float, so not really anything big. And they've been having trouble pulling profit past 3 quarters on the quarterly view. On the annual view, they did pull a profit in 2024, 2023. 2022, it's been slowly increasing the amount of positive net income that they've been getting, but they're kind of in a little bit of a slump here on the quarterly view. It's about 4:02. It's 4:02 p.m. So just another few minutes, and we'll get the earnings data. Debt to asset only 14%. That's why one of the reasons why I started wheeling it too. Before I'm not wheeling it right now, but when I did, I made some good money on it. Really low debt to assets, so that was good. And they got cash and equivalents about 29 million. So just another few minutes and we'll get their earnings data, get the EPS, revenue, any guidance I might see. I'll be sure to share that with everybody. The other one that's reporting earnings, while we've got a few minutes to kill here, is ticker symbol SAR. That's Saratoga Investment Corp. They're in investment banking, investment services, of course. And they report at, they also are supposed to report at 4:05 p.m. Eastern. The forecast EPS 0.69. The forecast revenue 32.7 million. And just taking a look at their chart here. They were trading above their anchored VWAP. Lots of stocks trading above their anchored VWAP recently, but their anchored VWAP's around like $24.25. And Saratoga Investment, they closed the regular session today at $25.03 a share, up 0.6% today. Going into the earnings, they had a PE of 9, EPS of 2. Wow, 11.9% dividend according to Webull. Only a $13 million float. Let me just look at the weekly chart. Yeah, I mean, geez, they've been paying a 12% dividend. Look at that, 6. Looks like they had a special dividend at one point here, but it looks like they pay quarterly every 3 months. But yeah, this stock's been, I mean, it's been kind of volatile in April. Hey, what's up, Blue Brain? Good to see you. PENG has earnings today. No, but we can definitely take a look at it. The 2 I was covering is AEHR and SAR. So I'm real interested in seeing what AEHR does. But yeah, if we got some time, we'll definitely look at PENG for sure. Okay, 4:04 p.m. We should be getting the data on both of these like any minute now. So I'm going to go to 1 minute chart on both of these. As soon as we get the earnings reactions on these two, we'll look at PENG for Blue Brain for sure. Okay, AEHR getting a negative reaction. I'm okay if that happens. Like I said, I used to wheel this. I was wheeling this stock back here when it was trading. You know, it was basically trading from like $6 to like $9, $6 to $10. When we started wheeling it, I think back here in March, and then we made some money on it. I don't currently have an open position on it right now. So if this thing does pull back, then you know maybe that could be potential re-entry on a wheel, but we'll have to see what the data says. So getting a negative reaction so far. So far, nothing on SAR, but AEHR looks like the data's out on that. So let me see what we got on my other screen. And let's take a look here. Okay, definitely getting a negative reaction. It's down 18% in after hours. So it's trading $12 and some change. Let's see if a bottom comes in or not, or if the selling's going to keep going. Let's see, last quarter, AEHR's revenue did have some good year-over-year numbers, but okay, still waiting on the data. As soon as I get it, I'll let everyone know. And also AEHR, the last earnings, they withheld guidance because of tariff uncertainty. So let's see if they actually put some out today. Let's go back to the top here. Okay, still nothing on SAR. Still waiting on that one. Okay, still got some selling coming in on AEHR. So bottom's not in yet. Just going to be a little patient with it. I still can't believe SAR, according to Webull, pays a 12% dividend. That's amazing. Usually when they're that high, usually something's up with that, but it's on the high side of the dividend payers, that's for sure. Implied move for AEHR, it's around 19%, and it's down in after hours right now, 20%. Expected move for SAR is just a little over 3%, so not really. SAR is probably not a big mover. We'll see what ends up happening. Let's see. Looks like PENG reported at 405 as well. So since nothing's going on with SAR, it's just nothing going on there. We go to PENG real quick. Okay, they got an initial negative reaction. A little bit of volatility there. It almost retraced all the way back up and then came back down. So let's see if I get some data on PENG. This is Penguin Solutions, another semiconductor company. Okay, just looking at a few things here. They got almost $600 million in cash, PENG. They've had back-to-back profitable quarters. I kind of like this company. Year-over-year numbers pretty good, except one little red blip there. Q4 of last year. Debt to asset only 66%. That's good. Let's see, revenue's been slightly increasing. That's good. Positive operating income. I kind of like this company, Blue Brain. Thanks for putting my eyes on it. Maybe I'll add this to my watch list and do a little bit more DD on it. But I like the company, even though it's getting a negative reaction for earnings. But hey, maybe this could be a little discount moving forward. I mean, it's not down a lot. It's only down 6%. All right, let me refresh AEHR real quick. It's almost 410. I still want to go over my spread trade that I opened today. Okay. I still don't have any data on AEHR. Maybe I'll go to their investor relations page and see if I got anything there. Okay, let's take a look. This might give me an opportunity to maybe run another wheel on AEHR. Okay, just waiting for their investor relations page to load up on the side here. Okay. Got some people calling for a dip buy opportunity on AEHR. And just so everyone knows, AEHR is up 113% in the past 3 months. 20% of its float is still sold short. But you can just pull up the daily chart and see what's been going on with AEHR since April. Been a nice trend up, that's for sure. Okay. All right, their investor relations page is not loading. It looks like they have an error on their end. Let me see if I can get in another way here. Okay, let me go back to SAR just real quick. PENG almost retracing back up to where it closed. So they did have an initial negative reaction, but they're back up here trading just below where they closed. We'll see if they can hang on. Okay, looks like I finally got into the investor relations page. So let's take a look at some more here. Okay, here's a recent post. AEHR to announce earnings on July 8th. Their actual conference call, their earnings web call, is going to be at 5 p.m. Eastern. Okay, just so everyone knows. And let me give everyone the link to be able to get into the webcast. Okay, give me 1 second and I'll get that link for everyone. Let me go back intraday here. Yeah, AEHR still sitting down here trying to find the bottom. Okay, give me 1 second. All right, let me move on here because I'm not getting any data on AEHR. They're having some issues with their investor relations page, so I'm just gonna have to keep moving forward. Let's go to SAR and then we'll bounce back to Ping, and then maybe I'll have enough time to go over that spread trade as well. Okay, let's see. Revenues. Okay, so here's Saratoga Investment Corp. Just some data on them. Geez, hold on. There we go. See if I can make this smaller and keep the chart up. Okay, so revenue, the expected revenue, they said they didn't make any revenue, so they missed revenue. EPS, expected number was 0.72, and they just reported 0.91, so they did beat EPS by 26%. Not really too much info to go off of there, but that's all I got right now. And still very impressed with SAR's dividend payment. I have to look more into that. Okay, let me scroll back here. Derek said you had a great breakout today on the weekly. High on your watch list tomorrow. Okay, yeah. Well, let me take a look at that since you mentioned it. Unity Software. Yeah, that's a nice weekly candle. That's for sure. Going on three green daily prints in a row. Looking nice and strong, isn't it? And they broke over this daily resistance too. That wasn't from June. What's their weekly chart look like? There it is. Okay. Wow. Yeah, they used to. Wow, this stock used to be way up there in the hundreds. Look at that. And they're finally gaining some attention from investors. Let's see. Unity. Net income's been improving. Still negative, but it has been improving. Only 48% debt to asset. They're sitting on almost $1 billion in cash. Very strong company cash-wise. All right, so AEHR got a negative reaction. It looked like it maybe retraced about 25%. Yeah, Brendan on YouTube. AEHR is definitely getting a negative reaction here. And let me just look at a few other things. June 30th. And AEHR, they're located in, that's right, they're located in California. Okay. AEHR. See if I can get their investor relations page to load again. Okay, it finally loaded this time. Okay, here's the webcast for their earnings call, and it's in about 45 minutes. Let me post this link here for everyone. Okay, there's the link on the bottom of my screen. That'll get you to AEHR's earnings web call at 5 p.m. Eastern. So I'll leave that up for a little bit so everyone can screenshot that. And let's take a look at, let me go back to Unity. Yeah, I mean, Unity, they can get a, ticker symbol U. If they can get above 30, this thing's going to be probably off to the races. Probably be back to 40 in no time if it get above 30 and hold. But I like the fact they got a huge cash position, almost $1 billion just chilling. So good for them. I'll go back to SAR just for a second. Go intraday. Yeah, there's really no movement on SAR. I'm going to keep this one on close watch because they pay a really nice dividend. Do they have weekly options? No, they only got monthly options. Okay. Yeah. Not really interested in running a wheel on something that only has monthly options. I mean, you could, but I just like more, I like the weeklies because it just gives us more options, no pun intended, to be able to do bi-weekly or monthly or weekly. But I definitely like the fact they pay a nice dividend, so I have to look at them a little more closely. They have been trending up nicely on the weekly chart too. AEHR formed a bearish H pattern. So the bottom might not be in on this yet, folks. We trade these H patterns. It's like a lowercase h, right? We trade these a lot on the Discord, or at least I do. It's about to make a new after hours low. So let's see if it $11.90 is the current low. It's at $11.90 right now. Big sell side imbalance on the order book. This thing's going to keep going down for a little bit, maybe. So situation like this, again, full disclosure, I don't currently hold a position on AEHR. I was running the wheel on it when it was below $10 a share, and it worked out really well. And I decided, after I wheeled my way out of it for profit, I decided to take a break from it because it just kept running. I really didn't get much of a pullback to kind of re-enter. I mean, I could have re-entered probably here last month when it came back to test it, my EMA here, but I just never pulled the trigger on it again because I had such a, I had a great successful wheel on it. So I decided not to dip my hand in the cookie jar a second time. Didn't want to get my hand smacked, you know what I mean? But hey, it looks like it might get an opportunity. If this thing falls below 10, I'll probably start wheeling it again. We'll see. I need to dig deeper after the stream and get more information about their earnings. They're definitely still selling off. The bottom is not in yet. The the previous after hours low was $11.90. It just breached through that, no problem. Came down to $11.46. So, all right. So, any bulls on AEHR? I know it doesn't look pretty right now. If it was me, I probably would have sold some covered calls going into the earnings, or, I typically don't play through earnings. So if I'm ever in a situation where I have profit on the table before the earnings, I'll go ahead and just put that in my pocket, and take all my risk off the table. And then I'll play the post reaction to the earnings data. And a lot of times we get some pretty sweet dip buys on some of our favorite stocks by doing that. If you not financial advice, but if you absolutely had to hold through earnings, at the very least, sell some calls. You could even use some of the credit you collect from writing the call contracts to purchase some naked puts or something to give you more downside protection. Because, of course, covered calls, it is a way to hedge the downside a little bit, but it doesn't hedge the downside. It's kind of capped, right? Your upside on the downside is kind of capped. So if you want, one layer of protection, go ahead and deploy the covered calls before the catalyst. If you want added layer of protection, take the credit you receive that you collect from selling the covered calls and use that to buy some naked puts. And that way you're fully protected on the downside, and you didn't really, it depends how it shakes out of the bag, but sometimes the credit you collect on the covered call is enough to cover the entire cost of your put option. And that'll be a true downside hedge with no cap on it, right? So, of course the stock can go to zero and there's your cap, but you know what I mean? So I like doing that. If I can ever get creative and figure out a way to collect credit and then use that credit to pay for my hedge, that's probably the ideal situation for me. That's kind of just what's worked well for me over the years. That's basically how I trade when I'm trying to look to protect myself on the downside. So just something to keep in mind. If you I know everything looks good in hindsight, but maybe something good to know moving forward, or if you're in a position and you don't want, and for some reason you don't want to get out of it before the earnings, sell some covered calls, take the premium that you get from that and use it to buy some naked puts, and then you're fully protected. You're good to go, at least for the reaction of the earnings, right? So good stuff there as far as just kind of explaining how you can better protect yourselves if you're long on a stock and you're going into an earnings catalyst. There's definitely some management techniques we can do to help protect yourself. That's what we're all about, protecting yourself. Fergie popped in, says, someone say dividends? Jim John had his hand raised in the Discord, and I totally missed it, so I apologize about that. I've got over 1,000 people tuning in on YouTube, Twitter, Twitch, and we're now streaming to Kick. Welcome, everyone. Got a handful of people in the Discord hanging out. Got Rick, Escuda, Vinny, McNulty, Breckle, Fergie's here, Nikki's here. Just kind of hanging out. So my name's The Swinging Bull with PB Alerts. I do these earnings streams every Tuesday, Wednesdays, and Thursdays. It's been a little on the light side as far as what companies have been reporting earnings the past few weeks. So, we're kind of on a light earnings schedule right now. So just trying to pick the 2 companies that I think might be the more popular, right, out of the few that are reporting earnings. But we got a little bit of time left here. Let me just go over this. It's a bull put spread is kind of the slang term, but technically it's a put credit spread, which is a neutral to bullish strategy. So let me pull up my trading view real quick. AEHR, still trying to find the bottom. But let me go to let me just do the one chart view here because I want to pull up OSCR. I know a lot of people have been trading this lately. After the big beautiful bill got passed, and of course, you know, going to be cuts to the healthcare. The healthcare sector took a hit when that was going down, and that was last week. So after OSCR, this is Oscar Health, by the way, they took a hit along with other healthcare companies. Kind of look like they're starting to bottom out, though, don't it? So they hit a low. I mean, yesterday they did make a lower low. You know, it's pretty clear here that they did. But that got bought up pretty quickly. I mean, it came down to 16 bucks a share. It got bought up, came back up to 17. It kind of came back down a little bit to 16 and some change. And it looks like there's a little bit of buying going on here in the afternoon today. It's just a very interesting chart. And just kind of looking at the daily chart, and got some pretty clean levels to the downside on the chart. I mean, S1 is definitely going to be 16 bucks, right? These are daily candles right here. So I'd put S1 at 16, probably put S2 around 14. So pretty easy levels there. But I did do a bullish spread on it today. I'll definitely manage the trade if it goes against me a little bit, but just to kind of show everyone what I did here. So this is Option Strat. This is just a program I like to use to build out my spread trades. Excuse me, I got the hiccups. Let me take a sip of water real quick. All right, so this was a put credit spread on OSCR. I'm just playing off of the potential $16 support level. And you can see here, it's a $1 wide spread. So I sold to open the $16 put, the $16 strike put, and then I bought to open the $15 strike put. I did that all on the same trade ticket. And that's going to give you a $35 credit per spread, which means it could be a 35% return on the capital you're tying up. You can see here the $100 margin. You need a margin account to trade spreads. But just to clarify, you're not actually, you know, someone asked me the other day, they're like, I don't want to trade spreads because I don't want to use margin and like get charged interest from my broker. And that's not really how it works. Your broker requires a margin account for you to be able to use the long put as collateral for the short put. That's the only reason why you need a margin account. As long as you have enough cash on the side to cover the width of the spread. So in this example, $1 wide spread, your broker's going to put $100 on hold while the trade's open. As long as you have cash to cover that, you're not being charged margin interest, okay? With most, with the brokers that I use, anyways. So I just wanted to kind of clarify that, since some people are kind of hesitant or scared of trading spreads because they think they're going to be charged like all this margin interest, and that's just not the case, okay? When I trade spreads, I just make sure I have enough cash in the account to cover the width, and you're good to go, okay? So this one pays 35% return on capital. That's pretty good for a credit spread, in my opinion. Expiration date is July 18th. All right. So it's not like we're married to the trade. Just got to wait 9 days, right? And more specifically, it's 1, 2, 3, 4, 5, 6, 7, 8. There's only 8 days, 8 trading days until expiration. If OSCR has a nice bullish move this week, I won't even have to hold it till next Friday. All right. So we don't have to hold these till expiration if we get a move in our favor. Of course, my break even is going to be the strike I sold to open minus the credit I received. So if I sold to open the $16 put strike, minus out the 0.35 credit, that's how you find out what your break even is. Option strat they're good enough to give me the break even. They do the math for me. But if you had to figure it out, like if you're doing this on paper or just trying to figure this out like on your little journal or something, to find out your break even on a credit spread, more specifically a put credit spread, it's going to be the strike you sold to open minus the credit received. So 16 minus 0.35 gives you your break even of 15.65. So the only thing I really care about is OSCR staying above my break even by next Friday. And as long as that happens, it'll be a profitable trade. To get the max gain of $35 profit per spread, the price of OSCR would have to stay above $16. You can see here on the graph. But there still is a little profit zone, if you will, from my break even of 15.65 up to the $16 strike. There's still a little bit of profit to be had there, even if it closes there. So, of course, if the price of OSCR breaches my short strike to the downside, there's always going to be risk of assignment there. So how I usually manage the trade, as we approach expiration, if we haven't had a nice upward move on the underlying stock by then, because if that happens, then we'll just take early profit, take our risk off the table, and move on to the next trade. But let's just say it's just trading sideways, and we got to literally wait for the theta, the time decay, right? Because theta is actually our friend when we're doing credit spreads. We like theta. But let's just say there's not much movement on the underlying, but we get close to July 18th, so maybe it's the 17th, maybe it's the 16th or 17th, like Wednesday, Thursday of next week. You're going to see some profit, even if it's gone against you a little bit. If it's below 16 but above your break even, you'll see some profit there. I again, not financial advice, but I usually would manage the trade and just go ahead and take my profit and take my risk off and move on to the next trade. That's because most times on spreads, we're typically not looking for assignment. Of course, you are able to exercise the short leg if you want to. My personal opinion, if I wanted assignment, I would just sell a naked cash secured put, right, and just run the wheel on it. When I do spreads, I do target like 20% or more return on my capital. And sometimes I'll bump up the lot size a little bit to get more of a dollar amount return. And of course, when you're bumping up the lot size on spreads, and you might not have the capital to exercise the shorts, I suppose you could exercise a percentage of your shorts. So let's say you did a 4 lot size trade. Maybe if you had the cash for exercise and you believed in the underlying, maybe you had enough cash to exercise 2 out of the 4. I suppose you could do something like that, and then you could just immediately start selling covered calls on those shares. That could be an option, a way to manage it, to try and maybe recoup some of the loss you would take by buying to close the 2 remaining shorts, and you'd take a little bit of a loss there. But then you could easily make that loss back by churning out some covered calls. That's one way to manage it. Another way to manage it is if the underlying stock goes against you, because obviously we want OSCR to stay above 16 is the best ideal scenario. Worst case, I want it to stay above 15.65, my break even, and there'll still be some profit there. But if it's gone against you, another management technique is what we call 2x the credit received stop loss. Some spread traders do 3x. I'm more comfortable around 2x. What that means is if this spread, if I collected $35 premium when I open this spread, the way we make money on credit spreads is we want both these legs to become worthless. We want it to go to 0. And then when that happens, I get to pocket this $35 that I collected on the onset of the trade. That'll go right into my pocket, and then we move on. But if the spread goes against you, well, let's say the underlying stock goes against you, then the spread's going to go against you. The value of the spread will actually increase. That's not what we want when we're trading credit spreads. So if I received $35, what I mean by 2x credit received stop loss is if the value of the spread ever gets to 70 bucks, then that could be a signal. Hey, I was wrong about the direction. Maybe I should just take the loss like a man and move on, right? And you could do that, and which means you would pay a $70 debit to close out the spread, but don't forget you collected 35 bucks. So 70 minus 35, your net loss would only be $35. So that's how you kind of keep your risk reward 1-to-1 when trading spreads. Because I know everyone can see here this max loss of 65, right? So to avoid taking the full max loss when a spread goes against you, just keep your eye on what the value of the spread is. And if you opened it at 35 and it gets to 70, maybe that could be a signal that, hey, let's accept the fact I was wrong about the direction, and let's just go ahead and keep our risk reward at 1-to-1. That way I can make that loss back on the very next trade, right? And that's how I trade spreads. And that's just how it's worked out well for me over the years. Is, there are situations where your stop loss could be built into the spread, and that's if you're collecting, like half the credit or half of the width of the spread. So in this example, it's $1 wide, so it's worth $100. So if I collect anywhere near around 50 bucks, then the stop loss is kind of built in, right? I can kind of probably set and forget those, because if I lose the spread, yeah, I'll lose $50, but I was trying to make $50. So you're risking 50 to make 50. In a setup like that, the stop loss is kind of built in. So, you could probably just let those go if you want. Or, if you want to take a minimal loss, if you feel you were wrong about the direction early on, then of course, take less of a loss then. But that's how I kind of manage these. If I'm not collecting close to half of the width of the spread, then I'll usually implement a 2x stop loss, and then that's good management technique for me. And then also what I said before, you could consider exercising the short. If you have the capital in your account to exercise that, then you could consider doing that and then going to the covered call side to bring in income. All right. But yeah, that's the trade opened up today. So we'll see what happens. Got my eye on OSCR. Again, there was some buying going into the close. On Webull, I already put my AEHR finally starting to bottom out here. Just it's trading just above 12 bucks, but had some green 5-minute candles print. So there are some buyers in the picture. So that's a positive sign for the AEHR bulls. But on the spread trade I just was talking about, my break even is 15.65. So I usually like to put a horizontal white line on my chart where my break even is, that way I can just quickly look at it. It could be trading intraday, like doing all this crazy stuff. But to be honest with you, as long as it's, trading above my white line, then I'm good to go to stay in the trade. If my break even gets breached, that's also another risk management technique. So you got the 2x credit received, stop loss. That's one management technique. The second management technique is taking assignment on your short and then basically turning it into the second half of the wheel strategy. You start selling covered calls. And then the third because let's be honest, everyone, it's all fine and dandy when we talk about spreads, but what does everyone want to know? What the hell do we do when it goes against us? That's like the biggest question I get. And I have answers. Okay, I got answers. So you can either do 2x credit, when it goes against us, you can do 2x credit received, stop loss, keep your risk reward at 1-to-1. That's probably one of my main defensive techniques. Number 2, you could take assignment on the short if you have the cash, and then and then sell covered calls, right? And then number 3, as a defense strategy, if you just figure out what your break even is on the trade before you enter, and then once you've entered, put your little horizontal line on your chart where your break even is, and if the price ever breaches your break even, you could go ahead and stop out of the trade that way as well. There's it's very, very experienced spread traders can also manage the legs individually, which would mean if the spread goes against you, the underlying stock's going against your spread, you could actually just stop out of the short leg and let your long leg keep running. And if you're really good at it, I mean, I wouldn't recommend managing the legs individually if you're new to spread trading. But if you've got lots of experience and you're comfortable with it, there is a fourth way to manage these spreads, and that's just stop out of your short leg only and see if your long leg continues to run. And then you can make back the loss that you took on your short leg with the extra gain that you could potentially make on the long leg. Now, don't get it twisted. Managing the legs individually, you can run into trouble if you're not careful. You could end up losing more than what your max loss was when you were going into the trade. The only way you can lose more than what your max loss is on the spread is if you manage them individually. And what that would look like is, okay, the trade's going against me. I'm going to stop out of my short leg and see if my long leg keeps running. The problem with that is if it bounces from there and starts going in the original direction you intended, that's going to go against, and that's where your max loss can end up being a lot more, and that's where you can run into some trouble. So not financial advice, but if you do manage the legs individually and you stop out of your short to see if your long leg keeps running, you gotta have a tight stop on that longer leg to prevent you from taking more of a loss than what your max loss was that you determined was going to be when you entered the trade. I know that's kind of a mouthful I just explained there, but I've been trading spreads for a very long time, and that's just the way it is. Okay, so I hope that was helpful. I just went over 4 potential management techniques if a spread goes against you. Okay, so this is the type of stuff I teach in the Discord. So we got about 1,300 people tuning in. Still got a few people in the Discord hanging out. McNulty, Escuda, and Breckle, the true OG soldiers here. I know it's been about 45 minutes. Usually these streams are about 30 minutes, but I went over a little bit today because I just wanted to show everyone the metrics behind the put credit spread and some of the management techniques. So I hope that helped someone out there. But again, my name's the Swinging Bull with PB Alerts. And that's basically what I do in the Discord is I teach more advanced options trading. So not your typical, naked options where you're buying a call or buying a put, that kind of thing. We do multi-leg option trades, and it's a lot of fun. And it opens up the door to more ways to manage the position instead of just being right or wrong, right? But yeah, with that said, if anyone's looking for a new trading community, definitely check us out. It's PB Alerts. There's no drama. We're there to make money. We treat it as a business, as we should. But there's some links in the description if you want to check us out. And if you do end up joining, tag me in the Discord chat. I'll definitely come by and say hello and chat with you a little bit. Maybe we can talk about your situation and see if there's anything I can help with. But yeah, other than that, swing a bull with PB Alerts. I hope everyone enjoys the rest of their night, and I'll be back tomorrow with another earnings stream. Cheers, and I'll talk to you soon.